I mean, I think, first of all, the market was painting it wrong relative to where they were on the AI revolution, the monetization piece. And like I've said, I mean, I believe what Microsoft showed in that quarter, I think that's an inflection point for all of tech because it shows what's happening in monetization of the hyperscalers. It's not just so important for Microsoft, but I think important for the overall sector. We're going to look back, and this is going to be a monumental sort of turning point.
Hey, Dan, we had SpaceX last night. I'd love for you to frame out what the SpaceX story is now versus maybe what it was at the IPO, because obviously there's been a lot of volatility in the stock. It's obviously a very long-term story, and it's obviously a big, big play on Elon Musk himself. What did you take away from the earnings release and the call last night?
Look, I think part of it is that there's a longer-term vision. That's ultimately investors that bought in on the IPO. That's the view in terms of the broader AI space story and what Musk is going to do over the coming years. But when it comes to quarters, look, there's no number that they're going to show that you could say maybe would calm nerves, right? Given the lockup and just given some of the nervousness you're seeing.
Right.
But for them, it's the balance. Because CapEx is how they're going to narrow the gap versus OpenAI and Anthropic.
Right.
And that continues to be the tug of war.
Dan, did Bill Ackman get this going? Because I had the clearest memory. In Q1, he stepped in with, for Bill Ackman, an odd lot. I mean, it was a piece of change.
Yep.
5.7 million shares. 2.1 billion. That's an odd lot for Bill Ackman.
That's a big one.
Did he get it started, Dan Ives? It was like, OMG, Bill Ackman's long, a stodgy Microsoft?
Oh, Ackman saw around the corner because investors were massively discounting what the monetization story was going to be with Azure. And I think ultimately counting out Nadella, because some of the OpenAI stuff and sort of the narrative. And I think it just speaks to, and we've talked about it obviously so much with you guys in the show, this is good. We're going to have white knuckle moments, whether it's Microsoft, whether it's tech. But the reality is this earnings season shows you're in the third inning. I can maybe even say bottom of the second. You almost go back to where this is all playing out relative to monetization, especially on the hyperscalers.
Up 38% from the end of March.
Yeah, just extraordinary. Hey, Dan, so where are we broadly defined on this AI conversation in the marketplace? What is the narrative in the marketplace? Because we had, big tech earnings last week, and a couple companies' stock reacted really positively, and Microsoft being one of them, Amazon, but some others did not. What's the street thinking about AI these days?
So I'd say let's put it like a Jenga puzzle. Okay, so the hyperscalers have basically doubled down in CapEx. The monetization you now see, whether it's Alphabet, Amazon, Microsoft. The software piece, I think Palantir front and center is showing you the enterprise use cases are accelerating. Even when you look at AMD, despite what you saw, it just shows chips. We've said demand and supply, 12 to 1, 13 to 1, and obviously NVIDIA front and center. When you piece it all together, enterprises are accelerating. The hyperscalers see it. That ultimately is a key catalyst for chip stocks. And I think what you're essentially seeing now is that the second, third, fourth derivatives of this AI revolution, cybersecurity among others, now it's starting to spread. This is real,
right? And
you can't even deny it.
Okay, Dan, the reality is you're in the Hamptons because you live in large.
Sure.
We all know that. We were in Barron's. And, it's like a thing. Dan, you need to go up the coast to Maine to Rogue Bluff.
Yep.
Rogue Bluff.
Yep.
It's almost like where FDR's summer place was on the border with Canada. Like they're more Montreal Canadian fans up there than they are Boston Bruin fans. And Dan, we got a question here that's absolutely brilliant from Rogue Bluffs, Maine. I hope I'm pronouncing that right.
Got it.
Does the innovation of AI, is it circuitous? Does it feed on itself into secondary and tertiary uses?
That's our whole, first of all, it's a great question. And that's our whole thesis, is that what essentially happens, it's not about the models, OpenAI and Anthropic. It's about the data, the derivatives, the data center build out, the CapEx, what that's going to do to energy. And it goes back to for the first time in 30 years, the U.S. is ahead of China.
Okay, industrial guy, how does it, I mean, Caterpillar just blew out numbers. You're going to tell me it's data centers. What's Dan Ives' x-axis for all these tertiary companies' advantage by your AI world?
Well, I think that's where, when you look at Caterpillar, you look on the energy side, like Bloom Energy, Quanta. I'm just giving examples of companies that are playing into the build outs of the data centers, the CapEx build outs. Remember, for every dollar in CapEx, there's a $5 to $6 multiplier across the rest of tech. And I think that just continues to be our theme. And I think this earnings season, earnings now caught up maybe to where some of the stocks were.
So what's the next thing that you think the street's looking for over the next 2, 3, 4 quarters, Dan? Is it more ROI evidence? Is it a scaling back in CapEx? What do you think the street's looking for?
Monetization. Okay. You want to now see, like, as King with the x-axis, you want to now see go the baton handed from CapEx to monetization. And I also think there's just a laser focus what's going on in Cupertino, because the consumer AI revolution runs through Cupertino. What they do on the consumer side, just by memory chips and everything else, that is so important to their AI strategy.